Good day, traders. This is Jason here. Divergence 101. Let's go. This is the NASDAQ. Okay. Let me show you the setups. Right here to right here. And right here. To right here. And down it went. See, we got in there. Our stop was 22.5 points. Went down 46 points. This is the open right here. You see how they buy faked people? They got everybody thinking, oh, it's going, it's going, it's going to go up. It's going to go way up here. Nope, that's not what happened. Excuse me. But first, let me show you how they tricked everybody. You draw this like this. And this one from the middle one. Where does this come from? Okay, I drew it too high on here on the chart. It needs to go like this. Okay, so there was a buy right here. Okay. So if you bought it right here, according to my system, you would have got out right here with about a 15-point loss if you didn't take 15, 13, or 10 points right here. Especially on the way back up, they tricked you again, making you think, oh, we're going to continue now, and they didn't. Anyway, I consider this a loss. A loss is when it came back down, pushed down. We got out right here, 14-point loss. Then, if you're brave enough to do it, you got to do the opposite signal now. Okay, just like this. And like that. And you would have got short right there. Where you got out, you had to quickly think and get back in. Sell it right there. Stop would have been up here above 136.50. Okay. And that was like a 45-point stop loss. And it went down 76 points. So you would have got your 1-to-1. So you would have got back your 15 that you lost here on the buy. And say it went down 50 pips, you would have got it back plus a profit. Okay, let's look at the Dow now. Now the Dow, oh yeah, there was a trade there on the Dow too. Haha! Those buggers. Right here. I didn't see that till just now. So there was a buy right there. This was at 15 minutes after 9. So if you bought right here at 15 minutes after 9, your stop would be here, 54 points. And how much did we go up? Oh, 50. We went up 50 points. Okay, you could have got something out of that if you were really willing, you know, once it closed up here, nice bullish bar, you could have, you know, moved your stop and stuff. You know, money management. That's a big part of the trade. I didn't go on about that too much in here, but anyway. And then we had a high and a higher high. Right? And right here. and our sell was right on the opening here. Our stop was 80 points. Went down 136. Okay, let's take a look at the S&P 500 now. All right. Trade was right here. Actually, I'm skipping a trade here, aren't I? I am. Let me show you the other trade. We got a low and a lower low. We have a low and a higher low. See, right here. No, it's not there. Jason, it's right here. Okay, there was a buy in here. I don't want to forget that one. So if you bought right here, the stop was 50. It was 5 points on the S&P. Didn't go all the way. It went 3 points. So if you got out right here, you lost 3 points. Then there was the hidden divergence right here, and down it went. Okay. If you would have got in right here, it went down 20 points. So you would have got back your 3-point loss from here from buying. Okay. You would have got it back plus more. You would have made profit. That's the thing with trading, okay? If you lose on one trade, you can't just throw your hands up in the air and go, "Oh, okay, well, it got me today. I gotta go home and go to sleep now. Sleep it off." You can't do that. You gotta wait for the next setup and do it, and that's it. And then you get back your loss, and then you get a profit. That's how you trade. So then price came down here. We put in a low and a lower low, right? Right here. Just like that. It's starting to take off right now. So here's the low and the lower low. And right on the opening of this current candle, you would have got in. Okay, stop is 5 points. Up, it's going up 7 points. You already hit your first target. But I got to this before it happened because I'm shooting a video here. But if you're watching your charts, that's the next trade. It's a buy. It's a counter trend trade. Regular divergence, what I call easy to see divergence. Very easy to see the low and the lower low divergence and the high and the higher high divergence. Very easy to see those two setups. It's the hidden divergence that's hard to see. Okay, let's move on now to oil. Oh, look at oil. Let me show you the trade. We got a low and a lower low. Right? Yeah. We have a low and a higher low on the indicator. This here sticks out at you like a sore thumb. You know, it just sticks out because it's so loud. Like, these aren't little valleys. This is a big valley with a little valley. You can see how it stands out. It's so easy to see it. Okay, and this one, you would have got in like right here. Stop on oil would have been like 20 points. Went up 55 points. Then up here, okay, we had a high and a higher high. This one's not so easy to see it. Okay. It's like that. See, right there. And right there. So it needs to go there. Okay. See how hard that is to see that? A lot of people would never see that. I used to never see them. Anyway, sell right here. Your stop would have been here. 31 points. Went 30 to there, then came back up to break even, then came back down. You would have got your 31 points. See? It went down 36. And then something happened here. I guess this is the inventories, right? It's Wednesday, right? I'm pretty sure it's Wednesday. Yeah, it's Wednesday. Must have been the oil inventory. That made it spike up like that. Did we have more divergence, ladies and gentlemen? Oh, we did, we did. We got a high and a higher high. And we got a high and a lower high, see? And the entry would have been right in here. Right where it is right now, basically. And will it go all the way back down? I don't know. Wait and see. Pound yen. Let's check out the pound yen. I'm sure there was a trade there, but anyway. It was very intricate how to draw it in, though. And we got the swing down to the lower low. I don't see no trade here. If you really, 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 really wanted to see it and draw in something like this, you could. See? Right there to there. And you would have got in right there. Stop would have been 22 points. And it almost hit 22 right there. And then it kept going. Then we have a double top right here. Double top. Technically, it goes to that one, and this one goes down to this one. Okay, and right there, you would have sold it at 172. The pivot's in the way. This is the pound yen. Stop would have been 20 pips, and it went down 27. So you would have got your 1-to-1 right there in that little move. Let's take a look at the euro yen. Whoa, look at that round bottom, eh? Woo! Okay, it's quite the round bottom, and then it went like this. Actually, it's a teacup also. See the teacup, ladies and gentlemen? Here is the cup, right? And here is the little handle. If you ever heard of a teacup formation, you're seeing one right before your eyes. It's almost perfect, too, except for these little wicks here. All the little teacup, do. Okay, enough of that. There's no freaking trade. There's no trade to sell it here. There's no trade to buy it here. The only trade you could trade is if you bought it right here, which is the teacup. And up it went. Freaking teacup. Oh, they got the people with the teacup. And this is gold. Like a gold, baby. We have a high. Actually, this is in the UK session. We had hard to see divergence, hidden divergence, right here. First, before the other big one. And right there, you would have bought it. You would have bought it right at resistance. And at the time, this here was up here. Just remember that. Scary as fuck. Would have bought right there. 20 points. Went up 90 points on the gold. Okay. Then up on the top of the gold, we have a high, right? And a higher high. Yeah, we do. Right there to right there. And our sell was right in there. So say we got in at the opening of this little baton here, the blue baton. The drawdown would have been 14 points. Your stop would have been 57 points. And it went down 125 points. There's your 2-to-1 win-loss ratio. All right, cool. Pound dollar, what did it give us? A low and a lower low. Actually, it gave us a trade up here first. Right here, triple top, whatever, la-di-da. And going down on the indicator. See that? That is bearish, easy to double top divergence. So we got short right there. Your stop would have been here, 12 pips. And you got it right there. It went down 14 pips. If you held on, it went all the way down, went all the way down, went down 53 pips. Then we had another setup to buy it right from here. Yeah, it was from there. Okay, it looked like it was from further down. Okay, right there and right in there. Yeah, that's it. That's it, man. That's it. Buy right in here. Okay, right at 7 o'clock or so, 10 after 7, that was a buy of the pound, and it went up right to the pivot, 34 pips, 35 pips. That was a winner, chicken dinner. And then, what did we have right here at the wicks? Double top. So easy to see that. Right there, boom. Remember now, traders, divergence traders, you always find the divergence first on the chart. Then you look if, if it's divergent on the indicator. So first you look for a high or a higher high or a double top, okay? Or, hidden divergence somewhere along the trend. You first look for it on the chart. Then you confirm it with the indicator. That's what you always do, okay? Okay, cool. Just wanted to make that clear to show you how to find it. It's 13 pips, and it went down 42 pips. And, yeah, that's it. That's all. That's the end of the show. Anyway, ladies and gentlemen, I want to thank you so much for watching and listening, and I hope that you're catching on and grasping how to trade divergence. All these setups are real. They really happened in record time. It's not some hindsight bullshit. I'm telling you, this is it. You can't get any better than this. You just can't. There's just so many cool setups. Anyway, I hope you have a good day, and I hope to see you here tomorrow to learn some more divergence. Good luck and good trading.